Okay. Yeah, noticed that a lot more people have popped in, so I guess we can get started. So let's see, what can we talk about first here? Let me just get my stuff in order. So welcome everybody. Thanks for showing up. About Steve's been trying to get about once a month one of these sessions going. So sometimes it's sort of prepared material going over certain aspects. Sometimes we just talk about some of the things that OP's got to offer, courses and that sort of thing. Um, And then I don't have anything in particular to speak about today. I do want to talk a little bit about overall what's going on with the market, some ideas about what to anticipate coming forward, and um, sorry, just one second. There we go. Um, and also to talk a little bit about FOMC and a couple of ideas around trading and that sort of thing. So where do we want to start? Let's pop over here. Let's take a look at SPY. So first of all, for people that have not seen this, I want to start by talking a little bit about the bigger plan and things that particularly I have been following over the market for the past little while, and ideas about where we think we are going from here. So I've got SPY up right now, and we actually hit a little bit of a new all-time high today. We broke over the previous one, but not by a lot. So we don't have a whole lot of movement. But let me switch this to SPX, just obviously the underlying index behind SPY. So the reason I want to do that is because I've been tracking a lot of information long term there, and so I wanted to use that. So when we look, let's use a bigger time frame here. I'll switch to the weekly time frame, clean this up a little bit by getting rid of some of these levels. Yeah, that should be everything that we need there. And then I'm going to turn on this because this is useful. So looking at the movement that we've had over, well, let's face it, we've been pushing up pretty hard for quite a while since about, well, we can look right here, since about October of 2022. So let me take a step way back first. And for people that have heard me talk about this a billion times, I apologize, but I just want to, for the new people, I want to catch them up a little bit. Okay, so we went through the period after the pandemic where here, one second. Let me just hide this again just for a second while I talk about this. So when the pandemic first happened, in the beginning of it around March, we had the Federal Reserve, Powell in particular, talked about what the Federal Reserve was going to do. And he said that the Federal Reserve would back the market with all the tools that they had in their belt until the economy recovered. And what they did as a result of that was they started printing a lot of money and they were injecting that money into the market in two ways. One, they were investing into mortgage-backed securities, and the other one was that they were buying bonds. And they were doing that to the tune of about, as I recall, it was about $110 billion per month for that entire period. And they kept moving with it. And so at the time, as long as you were willing to play the game, you were going to win. So anybody that invested in any stock, pretty much long term, it was just going to keep going up. Big institutional investors understood what Powell had said at the time. They understood it very clearly. And so they just kept investing and they didn't really switch out of stuff. They just put money into just about everything. Obviously, there were certain things like businesses that were doing better during that economy, during the pandemic. They were obviously putting more money in there because it was doing very, very well. But that went on for a while, and it stayed that way. And one of the things we were looking for was that turning point. Not so much when they were going to stop the quantitative easing, but for the first, oh, geez, over a year, every time it came up, Powell said, not only are we not ready to stop quantitative easing, we're not ready. We haven't picked a point where we need to start talking about when we're going to end it. So we're not ready to figure out if we're ready yet. And that was sort of the message that he sent over and over again until we got into um, around um, October, November of 2021, where he finally came out and they said, okay, uh, we know we're going to stop doing it. The time is coming. We we believe it's going to be relatively soon. And we're not stopping right now, but we are going to stop the quantitative easing. We're going to try and make a soft landing out of it. And not only are we going to stop the quantitative easing, but we're going to start quantitative tightening. And so they didn't really say much more about it, but that was kind of the signal. And you could see here, going into the end of 2021 into 2022, there was a whole lot of selling going on. And this was a whole lot of rebalancing, mostly by institutional investors who were taking their money out of all the high risk stuff primarily. And they were moving it into areas that were things that were going to perform better in a little bit of a downturn in the market, lower beta stocks, long-term good investments, precious metals, stuff like that. And so we had this dip over here until it finally balanced out. And then, of course, all those institutional investors, people that are investing in 401ks and stuff, giving their money to these people, they were still doing all that. And so there became a time where it was getting back into overall investing more in the market than what they were selling off. And that started to come back up, as we could see here. And so that's sort of the area that we've been in. Um, the economy was recovering, things were getting back in. And the other thing was, so this was our period of quantitative tightening through here. And one of the remarks way back up here that Powell said was when they talked about how long they were going to do quantitative tightening. And I have searched far and wide to try and find this, and I've got to do a better job. But there was one interview or one FOMC meeting where what he said was we're going to get rid of about $1.4 trillion off the balance sheet. And he said that we're going to do that. Once we ramp up, it's going to be at about $85 billion per month. And we think we're going to be done in about January of 2024. And so as the market was coming down overall, the plan that for the people that are in the ACNI chat, the Advanced Charting and Indicators chat, for those people, they had heard me talk about it, where I kept saying, if this is going to happen by January of 2024, then we need to expect that your big institutions, they're not going to wait until they're done their quantitative tightening to start getting back into stuff heavy. They're going to want to start building their positions so they've got something in there for when that happens, so that they're already prepared for when things turn back up. They want to be averaging into the position as the prices are coming down, so that they're better prepared. They're trying to get the cheapest price they can for this stuff. Because if they waited until January, when whatever decision they made about it, if they said they were going to be done, if they waited until then and they bought all at once, they would be fighting against themselves. They would be driving the price up on themselves as they're trying to get into the positions that they want. Not a position that anybody wants to be in. And so I expected that they would actually start doing that early. And that's what we talked about in ACNI, was this idea of starting to find opportunity earlier on. And that was what we were doing towards the end of 2022, sorry. No, that's no, yeah. So over here is where I was looking. I was wondering about the bigger move down. Sorry, over here, this area where we were coming down. And we started to get back in around that October area before 2024. And so that's basically where we've been at now as we're pushing up. Now, in reality, as far as quantitative tightening goes, if we take a look at the Federal Reserve balance sheet, one of the things they said was that they were going to continue with the quantitative tightening because they felt that they could continue doing it without having an overly strong effect. But when you look at this, like what I'm showing you here, this part, looks like, oh yeah, they bought up a whole, it went up a whole bunch and now it's come down. This is only going back until um, September of 2020. If you look just before that, there's a much bigger bump because this was the area. There's a little bit of move up here in this period. And then this is February and then March of 2020. And you can see this was like the big money printing that they did, um, getting that in place so that they could start uh, well doing all the quantitative easing that they were talking about. Okay, so that brings us to here. We're at a point where they feel that the economy is recovering and recovering to the point that they can start reducing rates. Obviously, they want to control inflation as best they can, and so they've been very, very cautious about the combination of these changes. They certainly didn't want to do it too early, but I mean, let's face it, the rate of inflation has been coming down, but I don't see how we're ever going to get to a point where we get to deflation. Um, which, okay, while we're in here, I'll explain this very quickly as well. One of the things, one of the things that I've seen come up a lot online from people that are just not, they're just not familiar with this whole concept of inflation. As they keep saying that the rate of inflation is down, I still see a lot of people online saying, hey, food is still really, really expensive. All of our stuff is still really expensive. Prices are still going up. What do you mean inflation is under control? Well, when they say that, what they're saying is that the rate of inflation isn't going up any further, but it's also not coming down. We're not getting deflation. And the best analogy I could give is if you're in a car and you're driving the speed limit. Now you push down on the accelerator and the car starts to speed up. You start accelerating. You pushed it down like you floored it down to the boards and the car takes off and now it's accelerating very, very quick. If you start easing your foot off the gas, the car is still accelerating. You're still going faster and faster and faster, but you're not getting faster as quickly as you were before. And it's not until you pull your foot back enough that the car stops accelerating and you're now at an even speed. At that point, you have stopped inflation, but the prices that your speed hasn't come down. At no point during that entire part of your trip did the speed ever come down. It's still very, very high. And you need to decelerate to bring that speed down. And I suspect that we're never going to decelerate inflation to the point that we're back to prices that we were at, 4 years ago. It's just not going to happen. We may have some resources or some commodities and stuff that cyclically will come back down on their own for various reasons, but it's not, it's very rare that we go through any period where we actually see deflation in pricing. Um, there are things that could be done for specific industries that the government can do to try and influence these things, but it all comes down to well, really supply and demand. And just because these prices got forced up, it's not going to change where the supply is. We might see a little bump in this with housing, but just as uh, with the mortgage rates, which are starting to come down in some cases, um, there are a lot of people that went through the pandemic when there were big opportunities to buy houses because the interest rates were so low. People were getting like 1% interest rates or a little over 1% interest rates. You'd be insane if you had the opportunity to get a mortgage in that range. You'd be insane not to grab it. And the problem was we forced the housing prices way up, but people were still buying because that interest rate was so low. Now they're into areas where they're kind of stuck. Some people can't really afford their mortgages. If they didn't get, if they went into it with like a 5-year mortgage or something, well, some of those are coming due. And so they've got to remortgage. And the new mortgage rates they've got to go in at are way higher. Um, and so they can no longer, with that new mortgage rate, they can't afford to buy a house. People currently trying to get in with the current rates at the prices that houses are at can't buy a house. And we're starting to see that in the numbers across new home sales, um, how long homes are sitting on the market. All of this stuff is starting to show that there's more supply available in the market. No, I mean, obviously that's going to vary across the country and across countries. Um, but overall, we're seeing what looks like um, I don't want to say it, well, it kind of looks like an increase in supply, but really what's happening is that we don't have as many people buying. And so that causes current homes for sale not to sell as quickly. One of the things that could happen from that is that people that are trying to sell a house who now need to sell their house because they can't afford the mortgage anymore are going to have to take a hit on it. And so they'll drop those numbers, bring those prices down. On top of that, we're um, we're pretty sure we're going to hear a rate adjustment to bring it down tomorrow, which means that we're going to see mortgage rates come down, meaning that they'll become um, more affordable. So the question becomes, which one is going to grow faster? The people who have an appetite and the ability to buy into these houses versus the people who can no longer afford their mortgage and need to sell. If it's the latter, then that would keep driving the price of mortgages down. New homes or home sales, it would keep driving the price of homes down. You're going to see a lot of people who have purchased like investment properties, Airbnbs and that sort of thing, who have no choice but to sell. So we'll see. I can't speculate either way what that's going to look like 6 months from now. There are a lot of people in the housing market who are saying, "Oh, there's going to be a huge collapse," but people like to um, people like to scream that the sky is falling a lot. So I really don't know. Let's see, 40 plus year lows and mortgage brokers just pushed APJ loans to those that didn't have a clue. Yeah, yeah. It's basically it. Um, so yeah, when I talk about, things like that in those cases, we could see prices come down on some things like that. But overall, I don't expect that we're going to have a wholesale um, deflation in pricing. My opinion over the whole thing was always the um, the government should have gone another way and said, let's put our money into helping to build more competition within areas that were getting expensive. Because obviously, if you can increase supply, and what you could do is you could do subsidizing for customer or companies that are doing this. Um, increasing that supply would bring some of those prices down. It would mean that from an overhead perspective, companies might take a bit of a hit because uh, they would have to create more product, meaning their overhead costs would go up a little bit more, but they could still sell more product, cheaper rates by increasing the amount that they're creating. Generally, companies wouldn't want to do that, but if you could get a little bit of subsidizing through the government to make that happen, that's one way that they could potentially bring some prices down on stuff. I haven't heard any government talk about doing something like that. I haven't heard any administration really talk about any good ideas that are actually um, functionally possible. So I don't I don't know how well things are going to go on that end over the next 4 years either way. Okay, but that being said, um, like I said, we're pretty much there's high speculation that we're going to get a quarter point reduction of the interest rate tomorrow, or at least it'll be announced. Um, I suspected that. Well, I mean, first of all, if there's no if there's no change, if that's what they come out with, I think that'll be very bad for the market, just because there was an expectation that that was going to happen. If it goes, if it goes down by half a point, then I think we could really see the market pop up a lot. I would like to think that the quarter point drop is going to bring the market up. Um, the and I've got a wild theory on why. So this is where I was getting into looking at SPX. So obviously we have an election coming up in about 50 days. Um, so when we look at overall market performance, this is I've been tracking how the market, as represented by the S&P 500, I've been tracking how that's performed across decades of different administrations. And so the most recent couple sitting here are Trump's administration and now Biden's administration. Now, regardless of what you could say about how either of these administrations has performed, we do know that from the point that Trump took over to the point that he left office, the um, the stock market rose 67%. The S&P 500 rose 67%. It was up 67% by the time he left office. Right now, um, under Biden's administration, we're sitting around 49%. And the thing is, any sitting administration in every election, they always do everything they can to prop up the stock market as they're going into the election, so that that's one of the things that they can claim. Look how great I did. Look how great the stock market is. Even though the stock market is not a direct reflection of the current economy, they'll always say, yeah, business is doing really, really great. The economy is doing great. Look how up the stock market is. It's all about the optics of it. And in reality, the current administration has little to do with what's going on with the overall market, but they still do what they can. So not that they can directly influence the stock market, or even to that matter, they can't directly influence the Federal Reserve in anything they're doing, but they can indirectly do some things, whether it's conversations or what have you. And so it only makes sense that they would do everything they can. And if they can influence the Federal Reserve to make some sort of change or decision that's going to help boost the stock market up over the next 50 days, then obviously they're going to try and do that. So I have a sneaking suspicion that we will see that, because for the Biden administration to hit the same percentage gains um, that it did during the Trump administration, the S&P from the SPX perspective has to get to 6289. For SPY, that's the 610 area that it has to get to that same level. So that's what I'm kind of looking for, is that over the next 50 days, we're going to see that push. So if I go back over to SPY now and drop this down, um, I'll just put this in here like this for a second. Oops, not like that. That's close enough. There we go. So I'm looking at that kind of move. And all in all, we're at 56 or 563 right now. So we're talking about really less than 10%. That's not overly difficult. Um, we've definitely seen that sort of move, even in the last couple of months. We've seen that level of move happen within SPY. So it's a total possibility that that's going to happen. Um, there's also nothing else happening that would that would contradict that yet. There's nothing happening yet. There's definitely lots of possibilities for stuff. We still have things going on with Ukraine and Russia. We still have things going on in the Middle East. Um, you never know when the uh, the countries that are creating BRICS, you never know when something's going to come out of there that's going to cause some problems. Taiwan and China, they've been a lot more muted in what's going on over there, but that could rear its ugly head because uh, if China makes a move on Taiwan, the US really has no choice but to do something about it. All the chip manufacturing that's really required by the US for the most part is coming out of Taiwan. And if China takes that over, that puts the US in a very poor position. Um, the Biden administration had been making advances in trying to get US companies to do more of that. There was talk about potentially moving or creating new foundries in Mexico because bringing foundries into the US would be probably probably too expensive to be feasible. But the point was initially there were talks about trying to do more to get more American chip manufacturers actually manufacturing chips. But we've really seen little of that happening. So still very, very much dependent on Taiwan. Um, but yeah, other than that, there's nothing really, at least over the next month and a half, there's really not anything to to potentially get in the way of that move. Now, you never know, something could rear its ugly head and change that. But for now, that's my plan. If I started seeing, uh, there's obviously a trend that's been built here on SPY or SPX, or if you're into futures, ES or what have you. If I start to see signs that that trend is breaking down, then I might kind of change my mind on that. But even the movements from the way I measure things, the movements that I'm seeing, um, these levels that you're seeing down here, I basically need to break that trend. I need to see SPY get down below those levels. The amount of time that it would take to get down below those levels is going to be a few weeks at the very least. So by the time I actually got strong signals that it's not going to happen, it would be, we'd pretty much have run out of time at that point anyway. Um, yeah, I was trying to think if there was anything else that I had to say about that. So talking about tomorrow, um, current interest rates for the first time since 2023, we're going to potentially see that change happen, potentially coming down a quarter point. Now, as far as tomorrow goes, for people that are day trading, or even if you're looking to get into stuff, taking some swings over a period of time, I'd be a little cautious tomorrow. Generally, through the day, we get some sort of hedging happening earlier during the day. And then around 11 o'clock until noon, talking Eastern time, 11 o'clock to noon, things start to really slow down. And in a lot of cases, not all of them, but in a lot of cases, price just starts to meander around there until closer to 2 o'clock when the numbers come out, when the FOMC meeting, I guess the results of the meeting come out, which will include um, any interest rate changes. At that point, I do expect things to get very volatile, and I expect them to stay volatile through that period up until Powell starts speaking at 2:30. And because I'm going to say there is an interest rate change. We still don't know it for absolutely sure, but if there is that interest rate change, then I expect that it won't be a short conversation for him, and he'll probably talk right on through until almost until the market closes. So I would suggest that for anybody that's day trading, yep, you can, follow good, strong technical analysis in the morning and, you know, trade like you normally would. Um, but you'll probably start to lose opportunities once we get closer to noon. And then you're probably going to want to just sit on your hands until, um, probably until about 3:30 or so. So expect that. I mean, maybe it's not super volatile. Maybe that doesn't happen, but um, prepare for it. And then if it doesn't happen, you just go back to trading like normal. But I wouldn't want to be I wouldn't want to be sitting in something at 159 and then have the whole thing move against me because there was a major reaction uh, to economic data being released. Okay, so that was the big bulk of the stuff that I wanted to talk about. But the other thing I wanted to do was I have been receiving, well, a couple of things. Um, I have been receiving every now and then occasional questions about the charting indicators course, the advanced charting indicators course, those sort of things. If you guys have questions about that stuff, happy to answer that. Talk about that a little bit if you want. The other thing was if you've got other stocks, stuff that you're interested in, um, over the next few weeks, if there's any stocks you want me to take a look at, do a little bit of analysis, I can kind of cover some of that stuff as well. Or any other questions you guys have about just about anything. Check on Walmart. Yeah. Go over here. So the way Walmart's currently moving. So let me say, first of all, when it comes to Walmart, I know Steve has been shorting it a lot lately. The smaller movement stuff, not big long term. And he's been doing really good at it, honestly. Um, I generally, there's been some periods where I've tried to short Walmart and it's never lasted very long for me. So I'm always very, very cautious about that. That being said, though, we are seeing some movement down. Now I have major levels um, that they've blown past for a long time. And bigger picture, if I was looking longer term shorts, personally, while we're above this zone over here, this is an area where any stock that's above this zone, I won't long term short it. Smaller term, sure. So looking at for smaller movements, this area here, now we are we're coming off an all-time high and we're making our first move down. So ideally, the way I trade and the way I teach people in charting indicators and advanced charting indicators, the pattern I would like to see, even though the current short that Steve is in is working, what I would really like to see for longer term short moves is that this continues down a little. At some point down here, this would come back up to this zone that it's cut through here, reuse that zone as resistance from this level, reject it, and then start coming back down. An entry in this position would really be the ideal entry for me for a longer term short position. Because right now, whatever bearish move you're in, anything you do at this point is just kind of chasing it. And if you wanted to go long on it, we've got sort of the same thing where now we've got this resistance. If I wanted to go long on something like this, I'd actually need to see it. I'd need to see it come back above, come back down to that somewhere in that zone and retest it. And then from here, continue that move up. So right now, I don't see an opportunity to get into a position. You're either too late or too early. And I would wait for one of those two things to set up before I was looking to enter Walmart again, one way or the other. Actually, let me do a second drawing. Yeah, so those are the two ideas that I would look for Walmart. Looking over at GameStop. So overall, as any sort of investment, I will say that I am not fond of GameStop. Um, from the company point of view, they're lost. They really don't have a product, or the product they have, they're kind of losing. Um, there's really nothing you can buy at GameStop that you can't just order online. And yeah, sometimes you do get people who are buying presents for people and they want to go buy something physical and they will go in and look around and buy things. There is a little bit of a market there for used games and those sort of things or used equipment. Um, but overall, a long time ago, I stopped seeing GameStop as a company that can do any sort of growth um, without some sort of uh, reinvention of themselves. Hold second. Sorry, sometimes the dog kicks open my office door, and I just wanted to close that. Um, okay, now that being said, GameStop has unfortunately been the victim of a lot of manipulation. It's no secret to anybody. Uh, and the problem with that is uh, at the time when the first time it happened, there was this whole thing about the stock shooting up, and the there was some talk about, hey, well, what they could do if they wanted to get some cash, what they could do is they could open up a new set of shares and sell those. And the CFO at the time said, no, no, that's very unscrupulous. Um, we'd be taking advantage of an artificial situation. Our stock price isn't supposed to be up like this. It's not where um, it's not where it should be. It's only there because of manipulation, and it would be immoral of us to make that move right now. And then like 3 weeks later, they fired him. And a couple of weeks after that, they said they were going to do it. And that's what they've done a couple of times now, is that when there's been these injections, these attempts to drive it up and stuff, uh, they keep creating creating new shares and selling those to basically put more cash into the coffers. But I'm not really seeing anything come out of that. Now, other than that, from a technical analysis point of view, even that I don't have a lot to say about it, it's obviously trending to the downside, but somewhere in this $20 level, it keeps it keeps finding a little bit of support. So like I wouldn't even want to speculate in a direction on it from here, but this is even like right now, this is its version of a bullish cycle right now, and it's just messy. Um, we've actually seen as the we're seeing the price coming down through this bullish cycle, and that's not really good for it. Um, yeah, I can't even give a good outlook on what I would the type of setup that I would look for me to want to take it. I yeah, I know I'm seeing here the comment here, trade GME for a new stock. As much as it's a joke, that might be the best thing that you could do with GME right now. Um, from the YouTube streams, TSCO and ASTS. I wasn't the one that did those streams, so I'm not sure what they were talking about with them, but let me pull it up right now. So going back to some of those support and resistance levels or volatility levels that I've been looking at, we did get a good bounce off of one for TSCO back in the beginning of August. We're pushing up down. We're running into another major one, this whole purple zone here, coupled with this green zone. So these are basically volatility ranges based on time. Um, everything that I do in ACNI is all around multi-time frame trading. And so understanding what the market is doing at different time frame sets is very important to that. And so we're finding multiple areas of resistance that it's running into. We're starting a bearish cycle. So we're still in that upward trend and still possible that it could turn around anywhere down to as far as here, 272 in this level. If it got down as far as here and still bounced, still a chance that it could break through all this and get up to this next zone up here in the 290s. Um, so what I would be looking for at this point would be like if I were looking for an entry to get into this, it's going to be um, very, very similar idea to what we were looking at previously. I'd want to see this. If I was going to go bullish, I would need to see it take a move up. Um, sorry, I should say, somewhere in this area, make that move up. That would be an okay entry point to continue with this trend somewhere in this space. The other idea would be that if you were looking much longer term, and this would not be as ideal, would be to wait for this to come back up this way, come back down, retest, and then make this move. That's a lot more waiting and a lot of missed movement that you're probably not interested in doing. And then the final one would be if this area of resistance is going to hold, then what I'd really be looking for is if it does return somewhere into this area or maybe even beyond that, then comes back up, retests with a lower high and starts coming back down again. This would be my ideal scenario if I was going to take this to the downside. And the other one you were looking at was ASTS. AS2 Space Mobile. So we did come back down to support zones over here and bounced up. Only got to this mid-level and starting to come back down. Where are our cycle points? Oh, they're right there. So this has actually just started a new push down. Now it's a very small move before it starts running into that support again, but based on the trend that we've got, we are getting into this is our fifth wave, our fifth bearish wave in this trend. One of the things that I talk about regularly with the ACNI people is your wave 3 and your wave 5, either trend, whether it's a bullish trend or a bearish trend, those are generally your higher probability waves to take. The exception to this one was I'd be looking for, if I were getting shortened here, I would be looking in this area for it to potentially stop. Ideally, you would want to see it break on through and get further than the previous low area down here. But yeah, and you're also like a day late in taking that entry, if that's what you're looking for. Taking a look at Dropbox. So similar idea here with Dropbox. I actually like this very, very much. We were up here at this resistance area. We dropped back down, bounced off of this support area here. Now we've come back up to this resistance area. And on top of that, this lower time frame daily resistance zone is starting to merge with this weekly resistance zone, creating like a good stack of resistance that it's running into. So this is ideally the type of setup that I want, where we made our first move down, came back up, ran into resistance, have a lower high compared to the previous high that we had, starting a new cycle down where we've got these two lines. We've got this red line, excuse me. This red line and this purple line, these are two, what I refer to as cycles. Try not to keep repeating ACNI over and over again, but components of the ACNI strategy. When these are very close together and the price can cross two of them at the same time, that's a strong indication of higher probability that you're going to have momentum moving in the direction of that trade. Because we've got the two of them sort of crossing together, this is when I talk about the ideal high probability setups, this is pretty close to textbook, exactly what we're looking for. It's got all the things that we would want. So if this is something that I had looked at previously, like we do a Sunday session, we go through and we find stuff, the stocks that we want to watch for the next week for potential entry points. If DBX had been on that list and I was watching for it this week, I actually would have this would have been an entry point. I think this is actually after hours though. Yeah, so might have contemplated it here, probably not. And instead would probably be looking for some sort of proxy entry to this. As close to, if it does pop back up a little bit, as close to crossing this line in the 2438 area. That's the ideal spot for me to get that entry with confirmation. So yeah, that's what I'd be looking for them. Taking a look at Nike. Nike was actually on my list, but it was already moving up in this area. And so what I wanted to see, let's see if I can make this a little bit less messy so I can explain this better. What I would like to see for it is it was underneath this zone. So it came back up over the zone. Now what I would like to see is that it comes back down, kind of retests somewhere in this area, starts a new cycle to the upside like this. So again, that we would have that higher low compared to the previous low. We have taken an area of resistance, we've turned it into support. We haven't turned it into it, it's become support, but you get what I'm saying here. And then that would be our entry point to continue to the upside. The next one was Disney. Disney is starting to show moves to the upside, but much bigger picture, something that I've been looking at. At one point, Disney made it all the way up to this resistance area up here. It's a big, big resistance area, part of what we would see in much, much longer term moves that take months and months to happen. This hit its peak up in March of this year. Once we get past that midpoint, there's a higher probability that we're going to see the bottom of that zone before we see the top again. So what I'd be looking for is, despite the fact that we're starting a little bit of a trend to the upside, I would expect that this is going to, well, anywhere from where it is now to let's just take a quick Fibonacci. If I can get this to get the top where it's supposed to be. So anywhere up to 107, somewhere in this space, I would be looking for this to reject and move back down and get down to the bottom. So really short term, if you were looking for just a quick play to the upside for it, then I would be looking for a little bit of a breakout here, pull back, use this as support, and then start another move, something like that. That would be the first one that I could potentially see to the upside. The other possibility is that we reject here, this zone that we're currently in, start moving back down. Maybe we get as far as this, the midpoint of this green zone and start up like this. That's another possible bullish entry point. And then the last one would be that we actually make it through that zone, come back down a little bit further to this area, have this bottom zone start to merge in with this one, and it bounce off both of those and heads to the upside. Those are the three scenarios I could see for a potentially bullish play on this. The other way would be that we actually get all the way lower than this point, come back up, hit it as resistance as this continues down here, and then we make the next move to the downside to get back down to that lower zone in the 70, 75 area. I wrote this like weeks ago when we were reviewing it and said, I'm contemplating, is it going to be, based on the way it's moving, is this going to hit 75 by October? So that's what I've been kind of watching for. For this to continue to the upside of the scenarios that I gave, bouncing off this orange weekly zone here, coming back down and bouncing off of that without making a new low compared to this low, that would be my favorite of the three bullish scenarios. Looking at Apple, I'm a little concerned about. We've come off the all-time high way back here. While a lot of other stuff is making new all-time highs, Apple's not. We've heard about oh my gosh, I can't think of his name right now. Warren Buffett. We've heard about Warren Buffett starting to get out of Apple, selling some of his shares and stuff. So that can't be good for Apple. But what I'm looking for is we've got this same sort of pattern here where we dropped down, came back when we got over this area. We're coming back inside, and I'm looking for this to continue actually down. Especially if we can get through this lower point, then I would expect that we're just going to continue to trend. Um, the ideal pattern that we would see is that from here we would end up making something lower. Well, it's actually got to get lower than there. So maybe even say somewhere in this area, uh, come back up and then make one final move further down, something like that. The levels that I'm pointing out here are just like complete random guesses. And the time it takes is also a guess. All I'm pointing out here is the pattern that I'd be looking for this current wave to head down lower than this previous wave over here, that there would be some sort of pullback after that happens, and then another wave down that would go even lower than the previous one. Because this, on a bigger picture, is wave three. I think if I turn this on, it'll probably give me a little bit. Yeah, it's going to be too much. Let me switch to the daily time frame. Yeah, daily time frame shows up a little better when I'm looking at. So I'd expect this wave three to come down and go lower than what wave one did. Wave four would come up. Wave four would come up, and then wave five would head down even lower than the other one. The standard 5-wave trend that we talk about often. That's a We always use a 5-wave trend as sort of the prototype to start with. We plan around a 5-wave trend. And then a lot of times your waves, your trends go a lot further. As an example here, you've got um, in this particular trend, there were 7 bearish waves within that full trend. So they don't have to be 5. We just start with 5 as the plan, and then we adjust the plan as we go. If Apple is going to turn around and ignore everything that I just said and just start coming back up, this area or this midpoint right here, those would be the two ideal areas for it to turn around. So for me personally, I'm only watching Apple right now to see, does this bounce or break through this area? Um, and for me to get confirmation of the bounce, it has to get above this purple line, which is slowly making its way down here, this daily cycle point, which probably in about 3 days will be somewhere in this area. So we'll see what happens with that. What else we got here? Eli Lilly. Just before I look at Eli Lilly, I will answer the next question after that, though. DCAS was saying, for long calls on SPY, would you be looking at expiry around election time? If I were going to go long like that, I might go a little bit further out with the expiry just to keep um, the volatility of the options a little bit less volatile. I like for those sort of plays, I like to be a little more conservative. Giving yourself a little bit more time on that option means that it's not going to react to stuff violently. It also means that your gains aren't going to be as good when you do get movements, but I like to have a healthy balance with those longer term trades where, I'm keeping things a little bit safer. That being said, just because I have an expiry that goes beyond the election date doesn't mean I'm going to hold through the election. I would definitely be, any play that I had like that, I would definitely be out before the actual election happened. Because once that happens, who knows? Who knows what the market's going to do? PLTR has been running lately. Oh, sorry. I was on Eli Lilly first. So Eli Lilly also came off, these are kind of some weird cycles that it's going through, but on a bigger picture, it was at this high. Are we looking at, looks like this was a new all-time high, but it's come back down, similar patterns that we were just looking at, right? We got back inside under that zone, bounced off this support area, got back up to it. Now we rejected it. So everything that I've been describing about the setups that I'm looking for, this is one of those examples. So we got this entry, which would have taken us down at this point. I mean, obviously, too late to get into an entry for it. Um, would have been this move down, looking for this to actually breach this zone and go further down, at least ideally down to this orange line down here. But obviously, the timing to get into that, this was back here in this area, probably about here. And so at this point, if I were in this, I'd be holding, trying to break through. If it couldn't break through this zone, then I would just exit, take profit. Um, but from here, if I was looking to, if I wanted to short this, I would have to wait for this trade. Wherever it's going to go, I'd have to wait for it to play out. If I wanted to go short with it, it would have to go down. This current wave would have to go down below this area over here. So maybe down here someplace, then have it come up. And then this would be my entry point to take that next wave down. If I was looking to go long on this, then having it stop here at this zone and bounce up. Let me just pull this down here a little bit. Yeah, so having it get down to the zone and then bounce up, not getting below this previous one, that would be my signal for an opportunity to potentially go long on it. That would be the first area where I'd want to do something bullish. Um, oh, sorry, Steve. I'm only now reading your message. That's you. Probably should have just changed your name so we do. Okay, so PLTR has been running lately. Would it be worth getting out now and putting those gains elsewhere? Wait for a pullback to add more, hold up, or beyond? Well, let's take a look at what PLTR is doing. So where this is sitting, first of all, this is an area where I would not be looking to short Palantir. Uh, Generally, when this happens, um, I'm always looking to buy the dip in this area. Once it gets above like this orange zone that's here, while it's above that orange zone, I'm always looking to buy dips. So if it comes back down, bounces off of anything up until this point, if it bounces, I want to buy that up. It wouldn't be until it got back underneath this zone that's where I would start saying, um, I'm not looking to buy the dips. On the other hand, if you want to take profit, I mean, first of all, a couple of things about that. The first thing would be that, well, the area to take profit should be where your plan told you you're going to take profit. So ideally, you would already know what that level was going to be. The second thing is, what is the goal of that trade? If it was just a shorter term swing, then yeah, you could be looking at a possible entry point or exit point to take some profit. If this is supposed to be something long term that you're holding for the next 5 or 10 years, probably less concerned about that. In this areas, I'd be looking instead to be doing things like selling covered calls against your investment. Um, yeah, so I guess from here it would either be you could either be looking at holding it, or like I said, depending on how long you were expecting to be in, then either taking profit here or just holding it longer. There's no signals that it's coming down at this point. It's all bullish waves. It's all bullish trend. So I wouldn't be any hurry in it. If I were looking at something that, like, let's say, I keep talking about the election as sort of an area where I need to kind of restructure everything or make changes, or that's my next big decision point is once the election is done. So if I were targeting the end of October, then I might say, okay, well, I'm willing to hold on to this as long as we're above, say, this zone here. And as long as it keeps bouncing up, I will hold it. And if it ever breaks below this zone, that's where I'll take profit, because the chances of it getting below that zone, turning around, bouncing off of something and coming back up and getting even higher within that time frame isn't super duper likely. So if I wanted to be out by the election anyway, that's probably what I would use, something like that. SMCI. Hmm. They have not been doing well lately. So, very first thing, similar to everything I said about when we're above the top of that orange zone, I never short stuff when it's above the top of that zone. I don't go long on stuff when it's below the bottom orange zone. Um, So until this gets back above this orange zone and starts using stuff in this area as support, there are no long entries that I'd be looking for SMCI. Instead, what I'd be looking for is new entries to the downside as we do things like come back up, reject this area. So I keep showing you this pattern over and over again. We were above the zone over here. We broke down under it. Now we've come back up. We've retested it. It went from being failed support to active resistance. So from here, be looking to short it. A little concerned about this smaller support zone here that you'd have to be cautious about, but really that's what I would be looking for. Let's see overall. It gets a little more complicated here because there are other things that aren't quite ready to align for me to do that yet, to take that short position. But I'm not going to get into that here. But the people in here that have taken AC and I would recognize that the daily cycle point is too far away for this to feel like a high probability entry to take it to the downside. You probably want to wait for a little bit of, if it does do this, consolidate a little bit sideways, let this line slowly melt back up, get into this area. And once it can cross both the red and the purple zone very close to each other, that's a higher probability entry to the downside. So from here for SMCI, mostly I would just be waiting. Disney, we did cover, talked about that earlier. Steve was saying, yeah, this is important. Why you all to be on the ACNI sessions? Well, yeah, I don't disagree with that. Max Statter said he took Exxon Mobil. Let's take a quick look at Exxon, see how that's doing. Oh yeah, so this is what he's talking about. We were under the zone, came back up, came down, retested it as support, entry point right here, and there's your move up. Yeah, it's good. I like that one. I think that was similar to, just go off track just for a second, similar to this is what I was doing um, with Citigroup, which I got in yesterday. Uh, we got we got bounce off the support zone. We came back up, but I didn't get my entry point until here, despite the fact that we were in the smaller time frame bullish cycle through here. Would have been nice to maybe get through this, but higher probability once we get the two of them working together in that movement. Wasn't honestly, what I was almost hoping for was that this would come down, stay down here a little bit longer, but the market doesn't always do what I tell it to, so I've got to take opportunity when it's presented. So I'm planning on actually selling this tomorrow. Okay, so Hunter wanted to take Tesla. Let's see here. So Tesla honestly has been kind of disappointing to me. There was a period way back here where I was looking for this. It was right here. This was the spot where it had moved this way, came up here. And what I was looking for was, like, if you could think of this as wave one coming up, wave two coming down, wave three came up, wave four came down. I was looking for this wave five to make the final push back up to this top purple zone. It didn't happen. And I thought there were a couple of occasions where it might happen either here or here. And once it broke down over here, I was just fed up with the whole thing and kind of left it alone. And since then, it's been kind of oscillating back and forth. Went through a period where it dropped down further. Um, and it can't seem to, like here where it broke out this orange zone, it couldn't convert it to support here. So it broke under it. Now it's back as resistance. So I'm really not enjoying what we've been seeing with Tesla. Um, Mostly because I wanted to see that big, nice, clean push back up. We just didn't get it. Um, as far as cycles within the current trend, we came off, this was a higher high up here. Didn't quite get to that orange zone, but the green one presented a lot of resistance, broke back down. Now we're coming back up. We've started a new bearish cycle right here, and that daily cycle point is very close. So if it could get under that, then we could get that next move. This is also a lower high compared to this one. So again, talking about higher probability setups, this is wave three in this setup. So if we can get under this daily cycle point, I'd be looking for further movement to the downside for Tesla. AC, I have no idea what AC is, Walter. Oh, Air Canada. I know exactly what that is. That's probably not what you meant. So if you want to post a little bit further and let me know what what you actually meant by this, and I'll take a look at it. Ben's was just talking about AC and I. Easy way to take the next step to simply trading. This session is a neat example of the gold tracks has given us. Well, thanks, Ben's. Appreciate that. Hunter seconded that. AC and I is synonymous with an ATM. That might be a bit of a stretch, but I get where you're going with it. Uh, uh, yeah, he's exactly right. It's about really seeing the movement for what it is and understanding the technical analysis to help you um, follow that trend, really, when it comes down to it. Oh, I see what you were doing. You were saying something about ACNI. Helps me with higher percentage of winning trades, smaller losses when I'm wrong. Very true. Okay, I'm starting to feel like people are kind of kissing my butt now. It's not comfortable. Thanks, everybody. Thanks for the nice things you've said about ACNI. So Ben wants to take a look at RTX here. Okay, so um, first of all, I just want to check to see if this was the all-time high for RTX. Yes, this is the all-time high that it's coming off of. It's made its move back down a couple of ways, but overall, it's gotten back down to this orange area. Remember, I don't want to short ever while we're above this zone, but we're hitting that now. And so it did try once to make a move back up, but it could try again. So the first thing I would be looking for in this case is that we bounce here. Let's see how that looks. Not quite ready for it. I'd like this purple line to be down here closer. Um, if you look at in this instance, when you see they're pretty close here and we cut through within two candles, we cut through. The idea, what I'm looking for is that when it crosses above this red line within at least one candle, it can also cross over that purple line. When we get areas like that, there are higher probabilities where we're going to get the movement that we're looking for. That's what it's all about. So I'd be looking for a bounce in this area, but really what I'd like to see is that it really kind of consolidates in this area for a little bit longer, maybe a couple of days, to let this drop down before it bounces and heads up. That would be the trade that I would want to take. That would be the first one in my mind that I would be looking for. The next one would have to be that you'd have to wait because it's already in this bearish trend and it's already in bearish cycle. And we would have to wait for it to move down like this, come up like this, and then do something like this. Roughly something like this. This is the next place that I could take a short trade in RTX. So that or something like that. Those are the two setups that I'd be looking for RTX. Um, Thoughts on JPM? Yeah, let's take a look at JPM. Speaking, it's interesting that you've asked those two questions because JPM actually said some sort of statement they were saying about, don't expect the markets to do super great over the next, so I don't remember if they said the next year or the next 10 years. Might have been the next 10 years that they said that. Okay, so JPM obviously made some reasonable moves down. It's stopped here at this major support volatility zone here. Looks like it could be bouncing. It's also got this the weekly mid sitting right here, this orange line. So we're bouncing up. I would have liked this move to happen just a little bit later if it had continued a little bit sideways, because look how many candles have gone by in this area where uh, we're in a bullish cycle, but we haven't on from a daily time frame, we haven't started that bullish cycle yet. So if I switch to the daily time frame, basically when you look down here, your cycles, the red areas are bearish cycles, the green areas are bullish cycles. It's pretty simple stuff. So you can see from a daily chart perspective, we haven't started a bullish cycle yet. But on these lower time frames, we've been running through a bullish cycle for a little while. Well, the problem is when you're looking at multi-time frame trading, on a lower time frame, if you run for an extended period in a cycle in either direction without that domino effect of starting a cycle in the same direction on the next time frame up, um, what happens is it just sort of gasses out. Um, Quickest way I could explain this is um, where are my, oh, they're right there. Okay. This is a car. It's a very, very basic representation of a car. Here's a here's a big time frame person, bigger person, stronger person. Here's a smaller time frame person, smaller person, not as strong. So the way this would look would be, let's say the bigger person is pushing the car this way. They're pushing it backwards. The smaller person is here. He's pushing it forward. Now he's struggling and struggling, pushing it forward. And for the most part, maybe he can make a little bit of leeway. You know, he pushes at times when this guy's having lunch or something like that. But overall, over any given of time, this guy is always going to end up overpowering this guy. But if this guy could keep pushing and get things moving enough that this guy decides to change sides and comes over here with them, well, now the two of them are pushing on the same side of the car. The two of them are pushing. This means that the car is going to go faster and it's going to go further. And that's essentially what I'm looking at when I talk about cycle point. Cycle point is the point at which various time frames change which side they're pushing the car. Because you've got, it's not just two guys doing it, you've got a whole bunch of these guys, all different sizes, who are all in here. So you may have a period where you've got one really, really big guy fighting against, you know, a small guy, a medium guy, and a big guy, and he'll end up losing. You might end up with a period where you've got a mix like this, where they're all jumbled. You've got a bunch pushing on both sides, and so you get periods where the price doesn't really go anywhere. But then you've also got those points where they're all stacked on top of each other, all in one spot, and that's when the prices really, really move. And so this is really what ACNI is all about, is it's watching for this interaction between these time frames. You're trying to find the points where, let's say, this is your smaller time frame. Let's even call it something. Let's say this is the 5 minute time frame. You're a day trader, you're watching the 5 minute time frame, and you're taking trades on the cycles when they happen. This is what you're looking at, right? So what you're going to want to do is you're going to want to um, probably when he's on this side pushing against all these guys, you ignore these cycles and you wait for the cycles where he comes over and joins these guys. And when this happens, that's when you play it. And then when this cycle ends and he starts heading back over, you get out. And now you just wait while this cycle happens. And when he goes back over and joins them again, you take this one. That's basically what we do in ACNI. As far as what this represents, this is just overall movement. It's the combined movement of everybody. I know people tend to look at market makers when they think about movement. even we hear, people talk about uh, market makers pushing price to a certain level, that sort of thing. The reality is that that's not really what market makers do. There are some things that they might do around better hedging for options to get them as close to max pain as possible. Obviously they don't want to lose money, they want to make as much money as possible. But overall, your institutional investors are the ones that are really making the markets move. They're the ones that are buying, excuse me, they're the ones that are really buying or selling big numbers of shares. The market makers are just responsible for being on the other side of that trade. But whoever it is, it's just the combined effort within a time frame of everybody within that time frame that is either buying or selling, depending on which direction that particular time frame is going. I can I can illustrate this a little bit better if I do this. If I pull up a weekly chart and I say, okay, this is JP Morgan, and I could say over these 2 weeks, obviously the weekly chart had red candles. So I can pretty much guarantee that if you go down and you look at all the other time frames underneath it, let's see, this started from September 3rd and it ended on uh, September 13th. So from the 3rd to the 13th, that seems all right because this was a short week. If I go down to a lower time frame, like the 4-hour time frame, and I review from the 3rd to so 13th is just around over here someplace. If I look at all the points, there's this one here where we've got a 4-hour cycle, nice big move. We get a cycle to the upside and we ignore this. We don't want to play this one because it's moving against that overall trend that we've been looking at. We start a new one. Now, in this case, this is a bad example because this one 4-hour candle took an enormous drop down here. So, of course, this would be a little bit different because we can't really take this trade because it made an entire big move all in one candle. But if we were looking at, say, a smaller time frame, you might then look at that. Well, even that was okay. This one's a bit of an anomaly, but you see what I mean about waiting. We're trying to take those trades with multiple time frames all working together. That's really what multi-time frame trading is, because all the people within those time frames, people are trading different time frames for different reasons. So the guys that are day trading, they're looking at maybe the 2-minute, the 5-minute, 15-minute candles, things like that. And they're taking their moves off of those things. You've got people that are maybe moving up a little bit. And they're playing, say, off the hourly candles. These are people that maybe want to make one trade that lasts the whole day. And they're looking at the trends at that level so that they can hold for longer. You may have people that are looking at, say, the 4-hour time frames for entries into some overnight trades that they're going to hold for maybe a day or two or even a week or two. You get into, you've got your long-term investment people that might ignore all of that. And they're only worried about what's happening on the daily, weekly, or monthly candles. So if you're only looking at one time frame, you're only seeing what's going on with one small portion of the people that are trading the market. When you understand at multiple levels what's going on with the market, helps you make better decisions about when to take the trades based on the type of trading that you're doing. That's ACNI in a nutshell. So going back to JP Morgan, we did get this bounce over here. I do like this. Like I said, this has been going on a little bit too long. So ideally, what I'd really like to see is that this actually comes back down, starts a new bearish cycle on the 4-hour, meaning it's got to cross this cycle point, comes down preferably to a higher low. And by that point, this daily cycle point will have come down far enough that when it crosses back above the 4-hour, in a very short order, it'll be able to cross the daily as well, meaning that both of those people move to the back of the car at the same time, relatively close to each other, so they could both be pushing up from there. That's basically what I'm looking for. That would ideally be what I want. If this does cross over this right here, I'd have a hard time taking this because we may lose momentum as we could see because this 4-hour time frame gets a bit exhausted, that it will need to recycle, have a little bit of pullback. Even if overall it keeps that trend in the same direction, comes down to a higher low and then continues up even further. it's not the ideal point to get in. And I'm always looking for the highest probability entry point. We never know what the market is going to do. So I want to hedge my bets as best as possible for the best outcome that I can. And that's what I'm looking for. Um, what area gives me the highest probability of having a good trade? So yeah, I'd have to wait on this. The other possibility is that it rejects here, comes down, makes a new bearish cycle. It does have this support and stuff down here, but it's possible that it breaks through that to get further down into this zone. That's a little bit of a stretch from this because we are coming from an all-time high. And generally, those moves from an all-time high, you don't get just one big solid move. It happens in chunks. It happens in waves normally. We've already seen some of these waves happen, so I don't expect that it would just make a beeline from here all the way down to here. It might be taken in more steps. Matter of fact, if I even look at this, what it's done for waves so far, you can see here was wave one came down, popped up for a quick wave two. Now it's taken wave three down, coming back up on wave four. So look for wave five to make one more push to the downside. That would be the other way of looking at it. And like I said, if wave five doesn't really make a new low compared to this low, look for the bounce and an opportunity to continue it up. Okay, so I have gone through that list, covered everybody's uh, everybody's tickers that they wanted me to take a look at. Any other questions? Anything else you guys want me to look at? Other than that, I want to thank everybody for showing up. Remember, tomorrow is going to be like, look at, when you're looking at the options, look at the IV for them. You're probably going to see that IV is very, very, very high on a lot of stuff with the expectation that at the FOMC meeting, there's going to be a lot of volatility. So for that reason, so just make sure you're very, very careful about being in trades, especially around 2 o'clock. Probably shouldn't be holding anything at that point in case there's a really huge move. It would be great to catch the move if it's in the direction that you want, but you really don't want to be stuck in that move if it goes against you. It's going to be very painful. So we're better off to be safe than gambling. Okay, so thank you, everybody. If you end up with any other questions that you think of later on, you can always hit me up in the chat. Happy to answer questions over there, or hit up Steve. He loves to get questions as well. Everybody have a great night, and I will